Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now the price of Bitcoin has just experienced a bounce from this important level of support, while the price has also been forming a bullish divergence. So I'll be talking more about that in just a moment, alongside some extremely significant events coming up within the next 1 to 2 weeks, such as the Ethereum merge, for example. All of that and more later in the video, so definitely watch to the end. First of all, just giving you a quick update on the US stock market. This right here is the Nasdaq 100 index on the daily time frame, and ever since around the middle of August, since the Nasdaq 100 index got a rejection from the important golden pocket level of resistance, obviously we've seen a major correction back to the downside in the stock market. But considering these are the Fibonacci levels of resistance, if we simply redraw the Fibonacci retracement tool from this low up to this swing high, we get our Fibonacci levels of support. And what we've seen over the past 1 day is a bounce in the Nasdaq 100 index from pretty much the exact golden pocket level of support. And in case you don't know, the reason why the golden pocket is so important is because that is the Fibonacci level where we most commonly see reversals, such as this reversal that we saw in the middle of August right at the golden pocket. And so now that we're seeing the Nasdaq 100 index bounce at the golden pocket level of support, this is something important to pay attention to. But I want to make it clear that obviously just by having this one daily candle in the green is certainly not enough confirmation to confirm any sort of bullish reversal. I'm just saying, historically speaking, the golden pocket, which is the 61.8% Fibonacci level to the 65% retracement level, is more often than not where we see trend reversals at, such as that rejection up here once again. And considering the fact that the US stock market, specifically the tech stocks, the Nasdaq 100 index, are heavily correlated with crypto prices, then if we end up seeing a bit more of a bounce from this golden pocket level of support in the stock market, then that would actually be a bullish signal for crypto. And while the Nasdaq 100 index is running into important support, that is basically the same thing for Bitcoin. This right here is the Bitcoin price on the daily time frame. And as you can see here, we've got this important area of support based on these previous lows back in June and July. And this area of support is coming into play in between around 18,500 up towards around 19,000. And obviously over the past 1 day, the price of Bitcoin has bounced from that important range of support right there, while forming a bullish divergence on the daily time frame, which is actually the first bullish divergence on the daily chart that we've seen in quite a few months. And just in case there's anyone watching this video who might be new to all of this, a bullish divergence is when we see lower lows in the price but higher lows in the RSI, and it usually means we're due to see reduced bearish momentum. So that can either mean a pause in the downtrend with some sideways price action and then eventually resuming the downtrend later on, or sometimes a bullish divergence can actually act as a reversal signal if we see other confluence, which basically means we need to see more bullish signals than just this bullish divergence by itself in order to have more confidence in a bullish reversal. And so as of right now, technically speaking, the Bitcoin price is still within this downtrend that we've been in ever since around the middle of August. But based on this bullish divergence that is visible all the way up to the daily time frame, we're simply due to see reduced bearish momentum. And I would also be keeping a close eye on the daily Bitcoin MACD, because this is actually getting closer towards a potential bullish cross, but right now this obviously hasn't been confirmed, at least as of recording this video. And this is all happening just after the price of Bitcoin pretty much perfectly hit the technical price target for this previous bear flag, which was sitting at roughly around 18,500. And while we're here on the 4-hour Bitcoin chart, taking a look at the 4-hour Bitcoin RSI, and what we've seen over the past 1 day is obviously the RSI on the 4-hour time frame enter into oversold territories. And if you're simply looking at the last few times this has happened within this downtrend so far, these previous times where the 4-hour Bitcoin RSI has entered into oversold territories have come just before seeing a temporary pause within the downtrend. And so this basically just backs up that bullish divergence that we're seeing on the larger timeframes, telling us that we're due to see reduced bearish momentum like this, for example. And as for some important levels of resistance to pay attention to for Bitcoin in the short term, I'll be looking towards this previous level of support, which is sitting at around 19.5k. So that's the immediate level of resistance that I'm watching for Bitcoin in the short term, and anything above 19.5k, then I'll be looking towards 20.5k as another significant level of resistance in the shorter term. But other than all of that, not much has really changed over the past 1 day. So if you're new to the channel and if you want to know even more price targets and levels that I'm watching for Bitcoin, then check out my last video on this this channel. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum chart, taking a look at the Ethereum long positions on the Bitfinex exchange. This indicator, by the way, shows the actual amount of ETH sitting in these ETH USD long positions. But a more basic way of saying that is pretty much this indicator right here is telling us how much money is betting on the price of Ethereum going to the upside on the Bitfinex exchange. And according to history, this indicator has been proven to be fairly useful because generally speaking, when we see a lot of money betting on the price of Ethereum going to the upside, then historically speaking, we see the price of Ethereum going to the upside. But when we see the big money cash out, I'm talking about hundreds of millions, if not billions of dollars exit these Ethereum long positions, then usually not too long after that happens, we see more bearish price action. And then generally speaking, it's during the later stages of that bearish price action, we see these Ethereum long positions open back up again, which basically means the big money is starting to bet on Ethereum again, and then we end up seeing more bullish price action until eventually they close their Ethereum long positions again, which leads into even more bearish price action over the coming months. And what we have seen in recent months when it comes to these Ethereum long positions on the Bitfinex exchange is obviously a lot of money flow back into Ethereum long positions during all of that bearish price action right at these Ethereum lows. And then as the price of Ethereum pumped all the way up towards around $2,000, we saw hundreds of millions of dollars cash out from these Ethereum long positions. And not long after that, we saw a lot more bearish price action. And as of right now, these long positions are still sitting at relatively low levels, which basically means, at least as of right now, there's not a lot of money betting on Ethereum going to the upside when it comes to the long positions on the Bitfinex exchange. And so historically speaking, if we're looking at other times where we've seen these long positions at these really low levels, it usually means that the downside price action for Ethereum is not really over, at least not yet. But it is important to understand that this indicator is not a short-term indicator. This does not tell us that we're going to see bearish price action just for tomorrow and then that's it. And instead, it's an indicator that tells us potentially what's to come in the coming months, not the coming days or even weeks. And also, it is important to understand that this is just one indicator out of many indicators. And so it is important that we find confluence across multiple different indicators and patterns, because if you look hard enough, you can always find a bearish signal or a bullish signal. But if you could only find one indicator flashing a bullish signal, for example, while everything else was flashing bearish signals, then in that example, we would have more bearish confluence telling us that the bearish scenario is more likely to play out. And just before we get into some more Ethereum charts, over the next 1 to 2 weeks, we have some extremely significant events taking place. One of those events being the Ethereum merge, set to take place in less than a week from now, in early next week. And so considering the fact that the Ethereum merge is one of the most significant events to take place in crypto's history, we could end up seeing a lot of volatility leading up to the merge next week, and especially as the merge happens. And on top of one of the most significant events in crypto history happening early next week, we also have new CPI/inflation data being released early next week as well. And then around a week after that, we have another FOMC meeting, also known as a Fed meeting, where we're expected to see another interest rate hike. So once again, early next week, we have the Ethereum merge and new CPI data. And then just the following week, we have a new Fed meeting with another rate hike. So basically, markets, especially the crypto market, could get extremely volatile over the next 1 to 2 weeks based on all of these significant events happening close together. So not financial advice, but entering into potentially a very volatile time period within the next 1 to 2 weeks, I for one would be very careful about using any high leverage trades, because during a volatile time in the market, obviously having your liquidation price quite close to the actual market price is not really a good thing. That can be very risky. But anyway, jumping into some more Ethereum charts, and this right here is the daily Ethereum chart, and technically speaking, this falling wedge pattern isn't actually invalidated. I mentioned in my last video that I posted yesterday on the channel that we could potentially see this pattern get invalidated if, for example, we see more bearish price action in the stock markets. But considering that has not been the case in the stock market over the past 1 day, technically speaking, this falling wedge pattern is still active on the chart, which technically means we still have those upside price targets in play. And if you're new to this channel and if you want to know my exact upside price targets for this pattern, check out my video that I posted 2 days ago. So not my last video, but the video before that one. But anyway, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, and obviously we found a lot of support at the golden pocket. I was expecting support at the golden pocket, but but to be honest, I wasn't expecting such a bounce like this. And by the way, for future reference, that golden pocket level of support on the 4-hour Ethereum chart is sitting at roughly around 1500. And as for some resistance levels to pay attention to in the short term for Ethereum, first I'll be looking towards this previous high, which is sitting at around 1650, which could act as a bit of short-term resistance, but really the next important level of resistance for Ethereum in the short term is sitting at this high at around 1680 to 1690. So basically, if we see a break above around 1700, then that would potentially spark another leg back to the upside just in the shorter term, talking about the next few hours and days. And if that happens, if the price of Ethereum starts breaking back above around 1700, then in that scenario, it would be pretty much safe to say that this larger head and shoulders pattern on the daily time frame would be no longer forming. Now, technically speaking, if we see a dump within the next 1 to 2 days pretty quickly down towards this neckline at around 1430, then technically this could still end up forming. But like I've said over the past few days, while this is forming, this is not an active pattern on the chart. It's just something to potentially pay attention to while it is forming. But unless we actually see a break below this neckline at around 1420 to 1430, then this pattern is simply not active, and the price target to the downside for this pattern is not currently active, while this falling wedge pattern is technically still active on the chart. But whether or not crypto prices are pumping, dumping, or just chopping around sideways, either way, you can make money in crypto if you watch these videos popping up right here on your screen. Because the video in the top left of your screen shows you how to make money if the price is going either up or down, and the video in the bottom left of your screen shows you how to make money if the price is chopping around sideways. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.